Hey, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is a review of the recent Forex trading patterns. We're going to look at last month and look at the patterns that were forming. What can you learn from looking back and reviewing last month? Tomorrow I've got live market analysis coming up at 8 PM Sydney time, so that's what's coming out from me this week or for the rest of the week. So before we get into tonight's webinar, if you can read through the disclaimer. All right, might move along. Now, if you don't know me, I think everybody on the webinar tonight knows me, but my name is Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at ACY Securities, and I am a full-time Forex trader. I've been trading for more than 15 years, mentoring for more than 10. If you want to contact me, my email's there. So duncan.cooper@acy.com. If you want to connect with me through the week, then go to our website, acy.com. Sorry, acy.com at Market News. Find me there or on the YouTube channel, ACY Securities Australia, or you can connect with me through the week on my handles there. I'm putting some analysis through there through the week, Twitter and LinkedIn, and we do at ACY have our Telegram channel. If you'd like to get access, just contact Nathan Bray. I will put his info in the chat right now. So if you want to get access to the Telegram, access to my chart layouts and templates, just contact Nathan. And he will get back to you. All right, let's get into the charts then for today. All right, so I've taken the time to review some of the pairs from last month. And, I like to do that for myself as well, because I may have a certain mindset about which way I think price may be moving on a certain pair. And then when I review it past tense in the month, I can take, maybe I should have been looking at it slightly differently. So if I see certain price points and patterns forming exactly the same next time, I might shift my bias. All right, so even though I've been trading for more than 15 years, I can still maybe think about maybe how I need to tweak things as well. All right, so got a number of pairs, might not get through them all, but I want to start with the New Zealand yen first of all. So if you've been following my education webinars, I talk about patterns, I talk about market structure. So I'm going to show you some patterns and also market structure. So this is the New Zealand yen. This dashed line is just delineating where the new month started, October. That was, and we had this major high over here at 89.69.2. I always like to put in the exact numbers, 89.69.2. Don't need that dash line there. So that was actually the start of the month with this candle here. Now, there may have been an opportunity here to trade down from this resistance area, maybe thinking that we're false breaking here, maybe forming, could be a double top for long term. But in any event, this is a significant high point of structure. If we go to some higher time frames here into the monthly, from a monthly perspective, if you're looking at it, I would notice that we're at historical high points over here on the left. So we're at very high prices for New Zealand yen. So when you're retesting these levels, there is a high chance that a reversal, be it short term or long term, could occur from a historical level. All right, so you can see that weekly top, which is a monthly high point there, cross references to this area over here. All right, so it's a non-level of resistance where we've failed once, we fall down and come back up for another test and we hold. So you could have looked in, we'll look at both areas. Primarily, I was going to focus on this area, but as I'm just talking in the webinar, there was possibly a trade in here that you could have looked at on the 4-hour chart. So we're going to look in here and we're going to look in here. How could we have been getting in? So let's just have a look at the first option in here. So that's just here. Now, in a perfect world over here, I would have been looking for that to pull back like it does. And then I would have been looking for a rally back up. Now, it does hold at 62. In a perfect world for me, I would have been looking at the 79% level. And I would have probably missed if I was trying to trade a retracement. But my 4-hour entry method I've taught in the webinars. And just bear with me a moment. I just need to do something technically. So I'm just going to pause the screen. All right, sorry about that. I had to open my new drawing tool up. All right, so the 4-hour entry method. So often when you hit a level of resistance, you may move above it and then fall back below it. Sometimes price will then come back up and just hit the level, or like it does here, there's 2 candles here that are rejecting, and then we get an outside reversal candle here. So we come up and then we reverse down. So the 4-hour entry method is when you get a break of a 4-hour candle from an area that you're expecting to hold. So that entry would be the break of that candle low just there. So we did trade up higher, but then we break that candle low. So the entry would be here. Stop goes above the high, and then you're waiting to see how price may unfold to the downside. Now, of course, here it moves down nicely, but the thing that's causing the unfold to the downside is you're testing historical level of resistance from back in time, plus a more recent high point. Price gets to an expensive level. Sellers are watching that level to deal at, to trade, and then price moves down. Then we come back up for a rally. Now, this is the one that I was actually going to look at, but then I thought maybe we could drop into this one and have a look at the possible entry point here. So that's one possibility where you could have traded down from this resistance level. Then if we just move back to the daily chart, we get a significant drop down here. I think there was some intervention maybe from the Bank of Japan at some point as well. But you can also expect then a rally to maybe move back up. So we come up to the major level, false break, fall, they're often going to get a rally back up to a retest. So for 3 trading days here, we're testing this level. And there's a 79% level here. So there's a 79% pattern here. You could just be trading at the 79% level. So that day just there. Any of those 4 out of 5 days here is one inside day, and then 3 more up here. You could be in trade at the 79% level, stop above the high. All right. Or you could have been also trading the failure, retest and failure on these 3 days at this level. Stop above the high. And I would have been targeting down here, but clearly price doesn't quite get there. But nonetheless, if you're managing your trade, that would have been a nice trade. So that's really a 79% retracement pattern. Failing at resistance. So we hit the resistance, fall, rally back up, and I've given you 2 methods there to get in, but you could also have potentially gotten in on the 4-hour chart. So let's just drop down to that. What I want to get across to you is this is all happening. These 2 very nice drops, moving down, so coming from a very strong level of resistance. It's not just in the middle of nowhere. All right, so we get to the 4-hour chart here. Now, when that drops down here, you could have anticipated maybe a 79% retracement up here for a failure. Now, depending where you put your stop, you may have got stopped out here on the first attempt because price does just trade 1 pip above that high. So depending where you put your stop, like so price moves down, you know, it comes up to that 79% level. So you may have gone, okay, I'm going to sell there. If you're just putting your stop just above the high here, you could have got stopped out. If you're a bit higher up, you'd been okay. Or maybe you're not tuning in till the next day. All right, so this often happens with me sometimes. I don't know what's happening up here, so I'm going to bed, falling asleep. I wake up the next day and price has moved down. It's come up. You can see that false break there. And I can see then the next few candles I want to hold at 79% level. So if I see that, I'll try to trade at 79% level, stop just above this area. So depending on what time of day you're trading and seeing this, you could get stopped out, or you could, price could be favorable to you because you don't get stopped out because you weren't in. And then there's another opportunity 4 or 8 hours later to maybe take an entry. All right, so there's a little 79% area in here you could have been trading at. All right, and of course that moves down. But both of these trades from over here or over here, it's all basing fairly on that resistance area and that 79% retracement on the second one. All right, so that's the New Zealand yen. I want to go through the New Zealand dollar now. This was the start of the month, and this trade's really potentially still going, and occurred, I think, on the 11th of October, up here. Again, this is all coming from, like I just showed you, this happened at the same time on the chart. The New Zealand yen one, where we had the second trade up here. This is where it's happening on the New Zealand dollar just here at the same time. Steve asked me, do I use limit orders on the yen pairs? I will do, yeah. Depending if I'm waiting to see price wants to hold, or if I just want to get in. If I just want to get in, if price gets to a certain level, yeah, I'll just use a limit order. So potentially there on that New Zealand yen. If I was trying to sell a rally at a price point, I can just put a limit order in there to sell. All right. If I think the market's very hot when it's approaching a level, and I maybe want to just wait and see if it's going to hold there, first of all, I'll just wait to see if it's going to hold. But if I definitely want to get in, I'll just have an order sitting there, and I'm just waiting to get clipped in. All right, so if we drop down to the weekly chart of the New Zealand dollar, we have a weekly level of support broken here. So broken support becomes resistance. That's the key structural point to the trade. Then on the day chart, price had moved down from this high to there. So this is just the start of the month, just coming in through here. And then we rally back up. All right, and there's the double top that formed. So how do we get in? You can just wait till the next trading day. From a day chart perspective, I'm just going to draw a fib in. Now, if I'm expecting a double top to form, from a risk reward perspective, I like to get in by the 79% level of this range. The target is down here at the 200% level. So I like to get in by the 79% point here. That maximizes the risk to reward. Covered that this last month in the webinars. So from this perspective, you could easily have gotten in at a 79% level the next day. We did break the low of the day before, but you would have been able to get in just here on that day, stop above here. And at the moment, you're still waiting to see if you can meet the 200% level. Now, preferable to get in within the first little move down by the 79% level. But later on, as we've been moving down, we have this low point just in through here. So once you break the low point, you should have the expectation that we're moving down potentially to the 200% level down here. And what happens here is that we break below, and I've discussed this in the webinars through the course of the month, expect a retest of broken support there to be resistance. In 2 trading days, it pretty much topped out at that level 2 trading days. So you could have been selling in that area up there. Stop above. And we've been moving down from that area too. But from a double top perspective, though, getting in by the 79% level up here is the key component. But if you're not sure what's going on, later on within the double top process of price moving down, if you break support here, that should be resistance for a continued move. All right. Now let's just have a look in this area on a lower time frame. Let's see what was happening then. So was there a lower time frame entry in that area? Doesn't really come back up for a rally. So it doesn't, you know, from a 4-hour structure point of view, it doesn't do, you know, it doesn't change the trend and then rally back up. So it doesn't give you that option to get in there by the 79% little retracement. So it doesn't do that for you. You could actually look in this area on a 15-minute chart if you wanted a really tight entry perspective. Let's have a look at that up there. All right. Now, what about a trend line coming up through here? All right, so you could have said to yourself, we're at resistance and we're going to form a double top. If I get a trend line break by 3 pips, I'm going to take the trade. So that would have been coming in here. Stop above there. So in that equation of things, here's the 79% level. All right, where I was saying you could have gotten in on the day chart. Well, with that entry point, you're getting in with only about 15 pips of risk there, whereas that entry point you would have been risking closer to 50. All right. So depending on how aggressive you want to be at these key levels where you think a pattern may be forming, you could have gotten in there with 15 pips of risk if you want to be aggressive, or if you wanted to wait and see how the day finished before then determining how to get in, you would have had to risk, you know, three to 4 times more. But in any event, whichever way you wanted to try to get in, would have hopefully given you a very profitable outcome. All right, but again, like the New Zealand yen trade, everything I'm showing you here is coming from waiting for your trade to set up at key support or resistance areas. All right, this being weekly resistance up here. All right. And a lot of time I'm not trading in the middle of where price is trading. I'm just looking at these outskirts all the time because I'm looking for this kind of failure for a large move. All right. All right. So there are key critical times in the month where these kind of patterns are going to form that are not going to happen every day. All right, next pair to look at. I'll have a look at the Aussie yen, which has been a bit messy through the month. That's where we started. Now, just checking my notes, the 18th, looking at the 18th, which is, I actually took this entry up here. In fact, I was waiting before then as price, this is where the month started to move down. And pretty much for most of the month, I was actually waiting to see if a head and shoulder pattern could form on this pair. Now it's actually forming potentially yesterday, today. So yesterday was the month end. All right, but we're not going to be talking about the new month. So for the whole month, the kind of pattern I was looking for was that. And if I draw a fib in, there's a 79% area up there too. All right, so that's really now a trade for this month. You can see how that maybe pans out for head and shoulder pattern to the downside this month, but I was waiting for that all month or some of the month. I was waiting for that when price was wanting to come up this way, but it never got there. And then I saw this hold here at this area. So I thought, okay, well, maybe price isn't going to get up to this high over here. So I saw this move down, and it's really a failed trade to some degree because I'm looking for a 79% retracement. So I did trade it here, stop just above here. So I traded it here, stop above there, and I got the risk out of the trade, but it never got down to my target. And we can see it came back up for a retest of that area once more, fell down. All right, so sometimes trades don't, sometimes you don't lose money on a trade, but sometimes you can't really get too much profit out of it because you're waiting to see if it can run to your target. All right, and sometimes a trade that you're looking for can take a month to set up, like the head and shoulder pattern I'm showing you for this month that could be setting up. So trading is a patience game. So there was a little trade in there. You could have maybe gotten some profit out of it, but at the end of the day, for the whole month, predominantly this pair was quite range bound. All right, so let's get everything off there. Move to another pair. But for those who like to trade the Aussie yen, it is worth monitoring over here for a head and shoulder pattern. And Aussie dollar has been rather sideways all month. I was looking for a particular pattern. I do like the double tops or double bottoms. I do like the 79% retracements. And if I was just, or head and shoulders, but I don't see any head and shoulders on this. And it's been rather range bound. And really, I actually highlighted a trade yesterday that is still on the go. There's this little 79% trade here, where it is a bit, it's false broke to the top, but then it moves down to a lower bottom here, and it comes up to 79% level there. And I don't know if this is yet going to run its course, but there was actually 79% on the large scale there that I'm showing you. So you could have been entering here. It's actually a 79% retracement of last week's range from high to low. And then as well, what happened, there's a smaller 79% level here. So we actually come up to 79% level a little bit higher, fall down, rally back up to the smaller one. I think you may have missed the smaller one by a pip, but you had the option of clicking in or simply trading at the larger level from a larger range once it came up and started to hold. You could have just traded at that 79% level. All right. So at the moment, we can see that it's, from a larger level, it traded down, right back up. So if you traded here, you stop, really only needs to go here. If you're trading down the first time, stop needs to go above here. And then if you trade the small one, you could have already taken profit down here. If you're trading the large one to maximize your profit, you need to target the 127 extension underneath here. All right, so there's a large 79% level there and then a smaller one at the end of the month. Other than that, pair was really kind of range bound. I was watching quite a number of 79% levels to come in, but, like trading is, you can be watching for trades to set up, but they never quite come. So, there's a number that I was watching. I was watching one up here. So I was watching up here, never quite came. Then I was watching one here, because the overall trend on the Aussie is down, even though it's rather range bound. So I was watching one to come up here, never quite came. So I've had quite a few pairs where I've been watching to get in. Steve, like you said, do I use limit orders on the yen pairs? Well, I use limit orders all the time. I have some limit orders set up on the Aussie here to get in, but never got in on, on some of these ranges. All right, so that's the Aussie covered. Now the Euro Yen, which could say has been rather difficult, and this is to show that trading sometimes isn't that easy. I was watching this area up here through the month as price came up in here, thinking that this area was going to form some form of double top. Any one of these tops to the left here could be a top that I'm looking to trade down from, and then we come up to here. So I was thinking maybe we're forming a double top here, and we come up like so. So I was actually looking, I actually took a little trade in here. So if I draw a fib in, I took a trade when price dropped down there, came up to the 79% level here, and I'm going to stop just above here, and I got taken out. So I just wanted to show that sometimes when you're seeing a pattern that you might want to trade, they don't always work. I don't want to give you the impression they always work. I'm just showing you some of the things that I was looking at through the month. And then we actually then have another double top that fails. So didn't actually trade this one. So that was, I guess, better than trading the other one. But whilst I didn't trade this because I was in another trade and I was having to manage my risk, there was actually a nice entry up here. If you were aware of this top over here, which was back in August, we came up there this day, the 23rd. 24th, we try to trade above, and then we can't. So there was actually a nice entry here on the 15-minute chart, a really nice tight entry. And if it was going to be a double top, getting a tight entry in was potentially going to give you a very large risk to reward down here. But of course it fails. But there was profit in the trade if you wanted to lock something in. And we could actually be creating a triple top up here now. We are false breaking yesterday's move from the Bodge's monetary policy statement. So we could be actually failing here for a move back down the range as I'm talking, but we're reviewing last month. So on the 15-minute chart, to show you in that area there. So let's just hop back there. Slav, I can see your Aussie comment. I'll get back to that in a moment. I didn't move my stop on my trade now because I got in on the little retracement back up, and then price kept moving up and stopped me out. All right, so this is where we tested last week. We came up a little bit above up here. But if you're monitoring, we get a very tight trend line break up here. And then down she comes. So very similar to what you could have done on the New Zealand dollar, I think, as I pointed out. You could have got a tight entry up there. And hopefully you could have locked some profit in. But of course, as we know, we'll go back to the 4-hour chart now. We came up and re-hit the level yesterday. So, but you can see net right now, we are failing here. So the line from here, if you look on the 4-hour chart, you can see the last 4-hour high of the candle. Once we've moved below that level today, we've actually come back up and retested that level on the 15-minute chart today. So really, there's a sell in here right now, and you could have a tight entry depending on how you want to trade it. Stop just above here, or you could be putting a larger stop up here. It looks like it's failing at that resistance area at the moment. Do I know it's going to work? No, I don't. I don't know if anything's going to work until it runs out. So Looks like we're failing it at the moment. Everybody has to make a decision. Do they like it or not? All right, so that's the euro yen. Not been easy. It's been looking like it was holding at resistance all for a lot of the month, but ultimately has broken up at the end of the month. But we're at very high levels for the euro yen. If you go to the monthly chart, we're at very historical high levels from over here in 2008. So we're in kind of nosebleed territory at the moment. Did have a very positive month by the end of the month, though. So how high can we go on some of these yen pairs? And there's no need to get in today. If we start to break down, it may give a rally retest and a failure. All right, so you can monitor that. Slightly seeing on Aussie dollar 63.40 level could be a resistance now. Yeah, well, based on a 4-hour chart just under there, yeah, for sure. You can see these last 4-hour candles. Once we broke below there, it has been holding. All the highs of those candles have kind of been holding in through here. Yep. So, you know, that could be an intraday level today to trade down from for sure. I'd much prefer to see, personally, I'm always, because that level that you're talking about hasn't got to the 62 level, I'd much prefer to see price action personally. Do that. Because I don't like trading unless it got to at least a 62% level. Lachlan, you said, do I restrict my account to a single trade at a time? No, I don't. I don't normally have more than 2 trades open at once at risk. I can often have, say, 6 trades open, but I'll only have 2 of those at risk. So I may be taking some positional trades for that I think maybe run for a week or 2. And if I got the risk out of those trades, then I can look for new trades. So I'll only have 2 trades at risk. So I can have as many trades open as I want, really, as long as they're not at risk. All right, that's how I do things. I never have more than 2 at risk. So if I have, if I've got 2 trades that are up, risk-free and up. So if I've got 2 trades that are risk-free and up, I can go and look for another trade. The only trades are going to be at risk is the new one that I open up. Hopefully it helps you. And Sly, you're talking to me about the interest rate decision. Well, don't know where price will be come next Tuesday. We've got the FOMC statement, of course, tomorrow morning before the Aussie interest rate decision. So we'll have to wait and see where price sits after that. All right, let's carry on. So I want to talk about the euro dollar. Just got to be mindful of my time. All right, so get rid of these lines so we can paint the picture. This is the start of the month. Now, I've been looking all month to trade down. I can quite clearly see though for the month it did create an uptrend, and I may have been, I may have made more profit on this pair trading to the upside rather than to the downside, but the weekly trend is clearly down, and actually the monthly trend is down too. So I was just looking for maybe 1 or 2 weeks to move up in the month before then moving down for the month, and that didn't quite come to pass. But I did actually pick the level that the market was been respecting pretty much for the month, and that's this area here. Did trade above it, it's 106.35. It's actually a monthly and weekly level of resistance. It's an historical level from over to the left over here, and here is a weekly low too. So once we broke below in the previous month, I was looking for that to be resistance, and I was hoping it would be resistance on a first test and then move down for the month, but that never really came about. And we did form, as you can see here, some form of uptrend. All right. And I think somebody did tell me in the webinar maybe what head and shoulder pattern was forming on this pair. So we did form kind of some uptrend, but maybe we're forming now a downtrend back down. So There was a head and shoulder pattern in here. I didn't trade this, but there's your left shoulder. There's the head. And this is a weekly level of support over here. So that's kind of what was holding the market. And if you try to trade right at the left shoulder, you would have missed getting in. So we do move up to a higher top, pull back. In my lesson on head and shoulder patterns, last time I did it, I did say if you want to get in all the time on a possible head and shoulder pattern, trade at the 79% level. Sorry, trade at the 62% level, because that is often traded at. I like to trade, you know, if the left shoulder's there opposite the 79% level, I would be looking to trade here, but price didn't get down to that in this instance. But if you always want to get in, it trades to the 62 level here, gets a little bit short of the left shoulder. And of course, you can see that it meets the target that I talk about, the 127 extension. So I didn't trade this, but that pattern certainly set up, head and shoulder pattern to the upside, off of starting to hold up weak support over here to the left. And then, and I didn't trade this either, because I was looking for the failures up here at the 60.35 level, 106.350 level up here. Is then there was a 79% retracement with this day chart trend, which occurred last week. Now, it may be a failed one, but if you were thinking that the uptrend is going to remain and continue up this way after this long-term decline, then your entry was here at the 79% level. Stop just below this low here. So just below there. Targeting the 127 extension. Now, if you see this fail here, and it failed here yesterday, by that point, if you're seeing this reversing down from this area of resistance from over here, that is firstly definitely the area where you need to be risk-free by that point, because then if the trade's not going to work, you're not going to lose any money, because if you didn't manage your trade, you're only just in profit at the moment and it's not looking too great. All right, so there's a key component there. You have to manage your trade. Not all patterns that you may be seeing set up are going to work. You can't just go, well, this pattern's triggered me in, it's going into profit, it's going to meet the target. It doesn't work like that. Some trades do, but you have to manage. All right, so, you know, some of these trades aren't working. They're giving you good entry points. You're seeing some profit, but then they maybe don't work. Slav, you're asking me, do I still hold trades from the tops of the market back from 2 to 3 months ago? I don't have any at the moment that are 2 to 3 months old now. I mean, I still try to if they come around, but I don't have any 2 to 3 months old at the moment. All right, Azu, hello to you. All right, so euro dollar been a little bit difficult. I did trade. Let me just tidy this off. I actually traded here, just a structure trade through the course of the month. I can get my all right, clear things up. I was looking up here around about the 12th of the month for this to fail here and then trade down. All right, so I did actually trade. I actually traded the level. So I traded here 106.35 and I had a 100 pip stop. So I have my stop at 107.35, which was somewhere around here. All right, now if I just held the trade open and did nothing, I'd still be in it and I'd be in profit. But when price came back down to this level, which is this support over here, I got the risk out and then price came up and just stopped me out. This is how I was trying to create a trade like you were suggesting there. Slav, you asking me about, wasn't any trades for 2 to 3 months? While I was trying to create one there for a long-term decline, but you can see I got stopped out. So that's life. All right, so it hasn't been the easiest thing, but we can see once more. If the long-term trend is working for this pair, this has been the level that, yes, been respected, false broken, and got false broke once more yesterday. I did say yesterday's webinar, we could fail here. All right, this is a strong level of resistance over here. It's all structure. All right, it doesn't matter that this has been in an uptrend, it's failing at structure. All right, Lawrence, you got a question? Let me just read it to myself. So you're saying for those who add fundamentals to their analysis, there are several institutions and banks targeting around 102 for euro dollar. So I'm even targeting parity. Well, the trend's down, so who knows where it's actually going to bottom, but the trend's down. So that's why I was trying to take a trade up here at 106.35 in the month to see if, yeah, we could, trade back down to maybe where we were at last year. Last year, did we get down to about 97? Taking a trade at 106.35 and to see whether it could run. So just because the banks are saying 102 parity, I don't know if, in my mind, I don't know if that's fundamentally, I don't know if that's fundamental information. That's just bank information. That's where they think price is going. Fundamentally, I would talk much more about where we think maybe interest rates are going in the Eurozone. Maybe they're on full-time pause now. And, I think Germany's going into recession. So those, I would say, are more fundamental things rather than what the banks think. Because banks can think one thing and they're not necessarily right. But sure, banks may be thinking that we're going to 102 in parity and positioning themselves that way. And I was trying to position myself the same way up here, but I don't have a position at the moment, but I'm probably going to be looking for, trying to position myself for that move down if it can come. All right. Now, how are we going for time? I'm just going to finish with the pound dollar. All right. So again, very much like the euro dollar, I was watching a very key level of resistance from the weekly chart. That was the start of the month here. With this long-term downtrend I was seeing on the weekly chart, once we moved below it in the previous month, I was thinking we're going to move back to it and hold to trade down. And it got rather choppy for the month, but it did, hold at 123.05. So in here, you could have been looking on a lower time frame for an entry, or you could have just traded the level. All right. I know for newer traders who haven't maybe watched price action for a long, long time, it's maybe difficult to just trade at a level, not knowing if it's going to stop. I will often, like I did on the euro dollar, I didn't trade it here because euro dollar and pound dollar were pretty much setting up at the same point, I think. So I traded the euro dollar, but you could have traded that with a 100 pip stop above. So that's at 123.05. So 124.05 is around about here. All right, and often then I'm targeting 200 or 300 pips down or more down the range for a long-term positional play. So you could have traded that last month and it never actually came back to hit your entry. So if you're at break even here, so when price traded down here, if you got to break even, it came up this way. All right, now it came up this way. And there was a 79% trade pattern in here. All right, so your entry was up here. So really what it's doing here, when it came up to the 79% level, it's forming more than a 79% pattern. Stop goes above the high. And there's potentially a left shoulder here as well. All right, so some formation of a head and shoulder pattern. Not a perfect one, but left shoulder, head, right shoulder here, 79% level. And, you know, if you traded here, you're still in the trade. If you traded here, potentially you could still be in the trade at break even, waiting to see what's happening. Are we going to break down long term this month, in the new month? All right. Got the interest rate decision coming out from the UK tomorrow from memory, tomorrow evening. So that may push it down depending on what happens. Adrian, you telling me you kept missing out the pounds? All right, some questions coming in about the current market. I'm really dealing with last month's market though. If I have time before 8 o'clock, I'll get to those questions. All right, so a couple of patterns there that you could have traded on the pound dollar at the sell side of the market. What I also wanted to discuss was through the course of the month on this pair, there was this area of support formed. All right. 121.10 it is, which is still holding the market now. It's been holding the market for all of October. It formed in late September. Sorry, September, October, late September, just here into October. And it just became a level of support, bottom of a range sort of thing. So you had your weekly resistance over here. So the range kind of looked like, that's how price action formed through the month. So there were opportunities if you wanted to look at this range. To be trading at the base of this support level, and the way to trade that would be you're just trading at the bottom. So you have a buy limit order at the bottom on support here. Your stop's going at the 127R level, and you're targeting up here. Now, it never actually got back up to the top of the range, but there was 1, 2, 3. There's been at least 3 opportunities where you could have traded at the level of support stop below here, and it's been bouncing up. So there have been opportunities to trade up on the other side of the market. Not as profitable as trading from the downside, but just to show you that if you're getting your support and resistance in properly and you're starting to understand what levels are being respected, you can trade both sides of the market. All right. All right, so those are the pairs that I wanted to go through. Just from let's have a look back. What can we learn? What can you take forward for last month? All right, so what's coming in the questions? So Lachlan is saying, putting my stop above the high. If I'm going for a very tight stop, like 15 pips, I'll just go 1 pip plus the spread above the high. If I'm going to be more like 100 pips or, 70 or 80 pips, I'll go 10 pips above the high. So if I'm using a larger stop, I'll go 10 pips above. If I'm trying to do something very tight, and just go 1 pip plus the spread above the high or below the low. All right, to give you an idea of how I set my stops. Isaiah asking me, do I think the Aussie dollars are good to trade today? I don't think anything's good to trade today until we get past the FOMC statement early in the morning. Because who knows where price is going to sit after the FOMC statement this morning. So that's my viewpoint on the Aussie. Mirren, you're asking me, do you think a major shift in the market with today's Fed risk event, or would you simply stick to your major key levels down currently? Well, I'm not going to trade now until after the Fed, because the Fed could say anything. I mean, I've got all my levels that I'm potentially watching. I know where the key levels are. I can watch to see where price trades at, up to or down to after the Fed, and then make a decision. mean, it's like the euro yen. If the Fed wasn't coming out in the morning, I like this fire up here on the euro yen. But come this morning, when the Fed does its thing, maybe that won't be looking very nice after that. So I'm just going to have to wait and see where price sits after the event. So that's my viewpoint on the Fed. It's very risky. If the Fed comes out, they could come out with the same exact policy they had last month, or they could change the policy, so it's very risky. Edwin, you're asking me, with my entry on the euro dollar, did you enter on a 4-hour entry or 50-minute? I just entered at the level. So on that euro dollar, when I traded up here, I just traded the level. I used 100 pip stop above. I just took the trade as price hit there. All right. Slav, you're asking me thoughts on JP 225. Let me go to these other charts. All right, JP 225. What are my thoughts? I think it's getting support there. And then on the weekly chart, I think what may happen here is that whilst that's turned to a downtrend, this will be probably looking for a move this way up into the 62.79% area potentially. All right, that's what I think. I think it's maybe rally time back up to high levels to maybe form another lower top on the weekly chart there. That's my thoughts, bouncing off this area of support from the monthly chart at the moment technically. All right, and then your other question, gold, will price break above 210 up to so gold. Well, gold's difficult at the moment because of the geopolitical landscape. Personally, this triple top area up here has not been, broken. This could just be a simply rallying back up to the 79% area or slightly short of to continue the decline down from this area up here. That's one viewpoint. The other viewpoint could be this is a very strong move up. It is a very strong move up from the monthly chart. And I've got hiccups. We could be simply, we just pull back just short of the 62 level here. We could be bottoming out here to trade up and through these highs. I can see both scenarios. From a day chart perspective at the moment, we're still in an uptrend. So I think if we're going to trade to the downside, we need to see the day chart maybe show some downtrend formation. It's very difficult with the geopolitical landscape. If you want to trade this level here, quite clear is getting false broken. This is a weekly high at 1987. So quite clearly 2000s is the buyer at the moment. And you were saying, are we going to break above 210 or move below 2? While the trend is still up and the geopolitical landscape is still negative. So as long as this structure, we could just see here on this day chart structure, we could just see trend holding, just pulling back. So just pull back to the 62% level today. for then a continued move up. Trend's not changing yet. You know, when you look at those time frames, weekly trend and day trends are up. It's very high up there where it could top out for sure, but I think you have to be brave to short it at the moment with the current landscape. I think that's my view. And yeah, like you say, Slav, there's two opposing views. I've given you both the views there. I can come up with two views, a long view and a short view. But to come up with a short view, the day chart doesn't confirm it yet. The long view's been held still with the weekly and the day trends at the moment. All right, so if I was waiting for a determining bias, say from the day chart trend, I don't have that yet. All right, so I think I would, personally, if I was trading this, I would wait to see if the day chart trend changes to down, because it could just hold this. This could just be a dip. Fed comes out in the morning, and then whatever they say, this just starts trading back up because the trend is up. All right. All right, I'm just going to wrap up, make sure I've got all my questions. Thanks, Slav. All right, Edwin, just back to your question on the euro dollar, because I did tell you what I did, but you asked me about the 4-hour charts. If you wanted to trade the 4-hour chart entry, I was talking about it. This is where I said I got in. There was a 4-hour rejection here. You could have traded a 4-hour entry just here. Break of that candlestick low, stuff above there. That's not the way I did it. I just traded the level. All right, and you could have as well. Let's just clear that off. You know, if we look at that area on a 15-minute chart for review, you could trade a trend line break to get in too. All right, so but I just traded the level myself. Sometimes I get it in my head where I think I'm taking a long-term positional play here. I don't want to miss getting in for the long term, so I just trade the level. All right, because I just had this thing in my head that I thought 106.35 is going to come back up and retest that. Now it broke below there in September. It'll just retest it, hold, and move down all month. That's what I was hoping for. I didn't quite pan out that way, but that's how I traded it. All right, I think I got all the questions. So thanks very much for your questions. Hopefully you found that helpful. If you go to the YouTube website tomorrow, so let me pull it up. Here it is. ACY Securities Australia. If you come to the video page there, this recording will be there tomorrow on here. So, or if it doesn't get there tomorrow, it'll be the next day. So it will be here. If you wanted to review it, you can just come over here and watch it, okay? Other than that, if you've got time tomorrow, I've got more live analysis coming up from me tomorrow, 8 p.m. Sydney time. Just come over here, register your interest, and I'll see you then. Other than that, thanks everybody. Have a great day wherever you are, and look forward to seeing you next time.